Manipulation is the way that banks and institutions. Oh, sorry, I'm getting distracted. Someone's singing in my house. Manipulation is a way that banks and institutions manipulate us retail traders of getting in the market on the wrong side. I.e., the manipulation could be a triple top, trapping retail traders in, thinking there's a resistance and sell the resistance, and then you get a manipulation candle that breaks above, stop everyone's out, and then you normally see with a manipulation candle that for example, say there was a resistance here, the candle would break above, manipulate everyone, thinking that now when the bullish they'll buy it after selling at the resistance, and then the other candle will come down and head in the original way. So it's just a way to stop retail traders out and manipulate us into thinking that our analysis is wrong and we're trading the wrong way, when in theory we are trading the right way, but they're just trying to manipulate us and think that we're not. And that's basically what it is. It's just tricking retail traders into placing stupid trades. And that's where our mindset comes in. We kick in, we know our risk management, so they manipulate us into placing stupid trades, revenge trading. All this type of stuff comes from manipulation. Boom. I hope that's one way to start off.
Yeah. Yeah, it's basically said, really.
Yeah. It's all types of manipulation. It's just trying to get. Because basically manipulation as well was just a way to grab liquidity, and liquidity is needed in the market in order to drive price a certain way. For example, if Euro USD needs to drop by like 600 pips in order to complete a move that the banks want to do, that it can't just happen out of nowhere. The banks, the institutions, they need to grab this liquidity, base a pool of money, and they get this by taking retail traders' stops. And this is where manipulation comes in, because they manipulate everyone, grabs all their stops, and then they grab their liquidity to then move in the direction they want to do. And so yeah, they're all linked together. They're all like.
Yeah, because basically there's only a certain amount of orders that can be placed in the foreign exchange industry. Like on a pair, there's only a certain amount of orders that can be placed. So banks want as much as they can. So what they want to be doing is grabbing as many of those orders from retail traders, so they can fill them themselves and they can drive the market down where they want. That's basically what they're doing. That's what where the liquidity is where people's stops are, because that's where, once their stops are hit, cool, they can fill them. They can fill their own orders, because now all those orders are taken out. There's more orders available. Boom, they add to it, and that's why you usually see the big like up movement and then followed by a massive down movement. That's what it's doing. That's banks pushing it up really quickly, stop everyone out, and then a massive down movement, or to where all the orders are getting filled. Basically, that's what it is. That's what's happening.
And you see this on every time frame, every chart, every pair. They all trade the same, and then once you can spot it at these key levels, you can't unsee it. And as soon as you see it, you think, oh, that's why that happened. And it's just thinking of trading like a bank and not being a retail trader, because retail traders are just sell at resistance and buy at support, the blah blah blah. Banks and institutions know that, so they know where to target your stop losses, and they do that, and then boom, manipulate you, and then take all the money for themselves, because what they do, they're greedy, they're horrible.
Yeah, so let's talk about a couple of trades maybe where it happens.
Yeah, jump on the chart, and then we can. It's a lot easier when you sit on a chart, because you can visualize it, you can explain it. And you can just see what the banks are doing, basically.
Talk about NZD, check this powerhouse.
Yeah.
Right. So this is one that happened. So if you remember, what we was looking for was just the breakout of this, and then we was looking for the pullback. And now you guys know about where we're looking to enter the market is at the end of a correction. So with this one, obviously, that we got in pretty much at the best place possible, because it was so obvious that what was happening. Now, you've got to look at this and think, okay, well, where are people potentially getting into the market? Where's their liquidity, and where is the market potentially going to pull back to? So, for starters, my laptop's going to explode, man. What the hell? For starters, there's definitely people getting in here on that evening star, potentially saying it's come up to this level here, maybe. So they're getting in there. Then obviously market drives up, stocks will then people out. But then you got to understand, okay, well, is that level like good enough for there to be a liquidity grab? Like, is that level good enough? For us at the time, no, it's not. It's jumped down to the 15. That's not really like a significant support level, resistance level. It's just literally like one turning point. There's nothing that really says, okay, well, there's a lot of liquidity in this area up here, because there's not. You'll understand once we go forward what the difference is. So okay, then the market come back up again. Similar kind of thing happened where we got this kind of even star pattern. So some people get in the market here. Boom, price came up one more time. Again, this is kind of the same. It's not really much going on up here. So it's not really enough to say, okay, there's liquidity up here because those people get in here. And then if we look again, the next one here, okay, there's like this kind of even star formation here. Now, if we drop down, we will see the difference of why we think there's a liquidity level above here. Drop down to the 15. You can see that, if I zoom in, you can see, okay, we've had like quite a few touches up here already. So that's like, okay, fair enough already. And then you can see price come up again here, where we actually slowed down in momentum. And that's where we saw the liquidity at, where we know there's actually people getting in at this level. It's not just a fluke. It's not just one time where the market's reversed at this level here. We can see that there's actually players again trying to get into the market. So we know there's liquidity up at this level. So what happened after that, where we kind of started to see this slowdown? Boom, we had this massive bullish candle here. And that was actually our entry there. And also, it kind of, to like add to the confluence of that, what actually happened was we was actually just forming basically a perfect head and shoulders pattern, where we was coming up to this level here. As you can see, we've got the left shoulder and we've got the right shoulder, and we also basically rejected to perfection the 0.618 fib level, like basically to perfection to me. It looks like people were just grabbing orders from this 0.618 level up here as well, just grabbing that final piece of liquidity, because basically all these people here at this evening star formation, they're trying to get into the market here because they think, oh, okay, it's pulled up high enough, boom, evening star basically at this level. And then no, what actually happened was on a 15-minute time frame, there was a 15-minute time frame where we took this entry, and we just clean this up a little bit, where we had a liquidity grab, which was this bullish candle here, this green one, and we actually placed it on the close of that candle, of course with a stop in a safe position, and then the rest is history really. So where we placed our stop, well, of course we placed it above like this level, any wicks that in the way of I can't remember where it was, maybe something like that. I think it was a little bit higher, something like that, down to the 90 ray. It was a 1 to 5, so that would have been a little bit smaller. Yeah, it was just above like these wicks here. Boom, wicks, boom. Yeah, just above there. And then it just dropped straight from there. That was a perfect liquidity grab right there. It's basically because usually what we wait for normally, if you remember, like what we'd look for is the extra confirmation. So for example, we'd look for something like a break of here, boom, and then this here is our extra confirmation. But all we're doing with this manipulation is adding the manipulation as our confluence. So it's not that we're getting into the market early because we're hoping it's going to come down like without waiting for confirmation. It's just this time round, the manipulation is our confirmation. So manipulation doesn't happen all the time, but it's just when you see it, it's kind of just an early sign of confirmation rather than waiting for like an extra confirmation, and then an extra confirmation. You just replace it. What we've done is just replace the confirmation. If that makes sense. Does that make sense?
You asking me or the group?
Yeah, just everyone. Right, that makes sense, isn't it? Like, because what we normally say.
Yeah.
Because
if you also look there as well, you ever heard something in forex called like the third touch rule of foot? Like, they work in threes. See there, that's had one time going down, second time going down, third time trying to go down. Then on the third time, what happened? Came straight down, and it's just that trying to see this type of stuff. The chart's speaking to us. It's a language. It's speaking to us. And it's saying, look, it's even on the top row, you said that 1, 2, third touch impulse, but that made 3 selling opportunities 3 times. They both fell. So just be patient. Wait for these numbers to pop up. Wait for it to fail. Wait for it to fail 4 times, 5 times. You'll know when to get in because it'll make that perfect double top, even a triple top. And then it will have that manipulation candle up, stopping everyone out, and you see price go wow to the downside or upside.
Yeah, not all the time. Sometimes it will lose, of course.
Of course. I wasn't. So like that, you will get losing trades without a doubt. It's like anything though.
Yeah. I mean, what was I about to say? Yeah, it's because it's just about kind of knowing when the liquidity grab happens, because it's you need to add a lot of other confluences with it and stuff that you can't just go, okay, cool, we've got this resistance, we've broken above here, let's sell here. Like, you haven't really got much to add on to that, whereas this, you've got like the third touch, you've got it coming up to a resistance, and even like this is a much stronger level of resistance across here, a much more obvious liquidity grab. Yeah, there's just a lot more confluences to add with that. So for that one, we didn't need to wait for like a break and retest, which didn't even happen on this one. So like this is one of those ones where we're starting to kind of catch these trades that don't pull back, and they don't kind of what's it called?
Just adding more
pull back. Yeah.
Just adding more ammo to the arsenal, isn't it? Basically, just better ways to get in.
Yeah. Trying to catch the earlier entries, catch the better risk rewards. Because, like, for example, here, where was it? Forms, no, sells. So we entered sells off here with a stop, somewhere like that. For example, if you can see on the 1 hour how we did actually have this ascending, like, so we had this corrective structuring, right? You can actually see where we could have, for example, just continue to the upside. You can see where that doji formed on the ascending channel, right? But at that moment in time, we're already 1 to 2, 1 to 2.5 into the trade. So our capital is protected at that moment in time. So it's catching nicer risk reward, and of course we just trail our stop loss with it. And like overall, of course, it was a 1 to 5, just down to this. Just down to this 90 right here, whereas usually, for example, we might do something like this, and then we enter here, and then we'd be quite later on into the trade. Here, well, for example, here it would have been nice, but boom, and then we're trying to trade it all the way down to here. For example, like, it's just getting later and later into the trade, so it's not bad to get in there. As you can see, like, if it did pull back, boom, like you'd be catching all this right now. But it's just about, okay, if that moment of liquidity happens, it's a potential confluence to get in early, and you don't actually need to wait for that confirmation. So that's with NZDCHF. Let's talk about our Euro CAD trades, which they're actually break even, and it's actually going into profit right now. So, like I said, it's not perfect, but it's a way to kind of catch a nice risk reward. So you can protect your capital early, because we had two break even trades on this. So what did we have for the first one? Well, we saw, okay, so price obviously impulse, and then it started to correct. And then, well, what did we form? we said that, okay, so we were forming this obviously corrective structure at the time, and then we formed this double top in the market. So this is an area of interest. This double top is an area of interest of sellers getting into the game, but no, it's not enough. And then we had this break above, and we said, okay, maybe this is a liquidity grab to touch the trend line, to grab more orders above here, stop all these people out to continue to the downside. Now, this obviously wasn't a liquidity grab as such, or maybe it could have been, but a failed one. But this is just to talk about the kind of risk to reward, where it's kind of a lot safer as such. So the candle that broke above was this big green one here. So that was the candle that we thought was the liquidity grab. So we entered the sell position off of that. So that's the liquidity grab above there, and we're thinking it's going to come back down. And our stop loss was something like up here, and we was able to reach like a 1-to-1, move our stop to break even already. So we're able to protect our capital, and the rest is history. So that was the first one where it tried to come down, but no, it went to the upside. So that potentially isn't a liquidity grab, but it's just to show our trades that we actually took. The next one was this one, where we thought, okay, or maybe it's happened again. As you can see, we've started to come up within this correction. Remember, what we're basically predicting is that this is going to be the end of the correction, and we're going to see this basically. And then that's where we'd normally trade off. But we're trying to predict it to happen and trying to see evidence that it's actually going to happen, just to add to as a confluence. So the next time, what did we see, which was earlier today? We saw this level of resistance across here, which was actually a lot stronger resistance and a kind of a lot more obvious liquidity grab. So you can see it's a lot stronger resistance, boom, a lot of touches. You can see a lot of people probably getting in on that, like evening star formation, and then boom. I believe that was a liquidity grab there, stopping everyone out. So what did we do? We entered on that. Our stops are above, somewhere like that, and then we reached that 1-to-1. And unfortunately, obviously, this came up, hit break even, and now we're obviously going back into profit. So don't know what happened with that movement, but yeah, maybe that liquidity grab was too obvious, and banks are just like, nope, stop everyone out again. But yeah, it just goes to show that you can catch nicer risk rewards sometimes. So your capital can be protected quite quickly, even if it doesn't move, even if it doesn't go in your way. But yeah, it just goes to show really. But now for something like this, for example, where we're not in the trade, we could still get the original entry that we're potentially looking for, which is a break out of this followed by that, and then we look to enter up here. And it's not to say that here on this pullback we're not going to get some kind of correction, and then we might even be able to get like a liquidity grab here to get in early and then to continue down, rather than if that forms like a 1 hour corrective structure, we'd normally wait for the break and retest. No, we might be able to look for a liquidity grab. Stuff like that is what we're trying to look out for now. It's just that extra confluence, so we don't have to wait for confirmation, is basically what we're waiting for. You get me? You get me? Alright. I think I've got. Have you got anything else to say? Right?
Yeah, I think I've got some.
Nice example.
Yeah, I think I did. I'm trying to think which one.
Any questions? Go ahead. Feel free.
As Euro CAD, leave that up. Yeah, so remember USD JPY set in this morning, I think it was. Just having a look at it now. Didn't place anything, but this is like busy at the time, but this is like a perfect example of another liquidity grab. Whenever you see a pound sign, that means liquidity there. That means there's money above there. Because you've got to think, people in the market, they're shorting it here. Like all retail traders, basically. They're shorting it here, stops above. They're shorting it here. Because you've got to think, everywhere in the market, people are buying at support and selling at resistance. So throughout the whole market, every single retail, like You'll be stupid if you couldn't draw in that resistance. Just put it that way. And everyone will every single retail trader will be placing trades like this, trying to catch this. This time you would have got lucky. That would probably have been a break even, and this one would have stopped you out. So basically, So basically, what I'm saying here. So every single sorry, let me quickly go. Boom. Every single retail trader would have seen this and thought, bingo, a nice bearish candle. Let's just get in. Let's set up resistance. And what do banks do? Straight away they go, boom. Came up here and took every single one out. All this liquidity above here, just gone. Boom. And what happens straight after that? Boom, we get that nice other doji, and then we get that continuation to the downside. And this is manipulation in the finest. It's tricking people. Because there'll be loads of people buying this breakout now, thinking, oh, we're bullish now, we're bullish. And have their stocks above here. And trying to buy that. Oh, we're breakout traders. So all banks are doing, they're doubling up on this manipulation here, grabbing all these stop losses in order to push price where they originally want to go. And in this case, as you can see, it grabbed those orders and boom, went straight down to the downside. Now, there was this level across here as well. You see there's a lot with these type of manipulations where it has like a mini level in here, which is fine, but this is just like a correction, boom. But you just got to watch out for the major ones. Like this one's a major, this one's just a minor coming into a big major. And this was just a supply zone. Supply zone got absolutely wiped, stop loss, stop hunts, and then boom, straight down to the downside. So if you were to see that and saw that manipulation candle there, entered on that one, stops probably just, I would say this here to be safe, because you can see nice level across here. And then target the original target of 105. So you're looking like a 1 to 5, trading that, just trading like a bank. This is what banks do. They see retail traders doing this. Be opposite, trade like a bank, place that, and obviously right now, if you was to get in that, you'll be looking like a 1 to 2 straight away. So yeah, boom, that's another perfect example of a liquidity grab, because it needs to. Like the market can't just drop all of a sudden. It needs liquidity. It needs to stop. It just needs money, and it needs to wipe out orders in order to place these big orders that they need to do. And everything has a reason. And these are the reasons. You might think, oh, why did it do that? It's meant to be a strong reason. It's meant to be a strong level. The reason's because it's this. And you just got to open your eyes to it and be able to see it.
I agree.
You agree?
It's mad. If you guys go look back at charts and stuff, trades you've entered,
oh mate,
you'll see it a lot.
So over the place. Like even here, for example, look, this is all over the gaff. Look, you got a level across here, resistance, boom, manipulation, boom, straight back down, and then boom, hit your target back down there again. Like it's all over the gaff. You just need to open your eyes to it and just think everything has a reason. Like
it all makes sense.
It all makes so much sense. It all makes sense. You just got to see it. You got to train your eyes. It's taken us years to do it, but we see it and we do it. Yeah. Right. Jump on it.
Couple more examples, I think I have.
But lads, don't go, and ladies, don't just go flying into this. Back test it yourself. Have a good old look at it and get used to these type of stuff. Check all time frames. Check the 4 hour, check the 1 hour, check the 15. Check this, check that. And then if you need any questions or need any help on it or need any tips, we're a 24/7 helpline, yeah?
Yeah, it's not to say also that it's not to say that everything we've done is wrong, because it's not to say everything we've done is wrong. It's just we're trying to just level up a little bit and just catch some nice, some more. We're trying to gain more from the market, because what we're kind of noticing recently is, you guys probably noticing this as well. It's more like it's probably happened to you as well. Like you're getting the direction right most of the time, but you're not in the trade, and it's just kind of we're trying to find a way to just make sure we're in that trade, because okay, it's cool, it's good, it's a nice feeling knowing that you get a direction right, but you want to be in those trades as much as possible, especially when you know it's going to go that way. It's just about now having that extra confidence in place, which we've managed to kind of find now, having that extra confidence in place, a reason to actually enter that trade and actually be in it rather than watching it go and waiting for something else that isn't going to happen.
Yeah.
But of course, sometimes it's not going to happen, and you'll see like the pullbacks that we normally wait for. It happens sometimes, but this is just like a level up. I'm trying to load something. Yeah, Ross. I mean, this is great. Well, I think it was going on a lot before Corona.
Yeah.
But like the same kind of strategy we've been using with you guys like over the last couple of months and stuff, like start of the year, like end of last year, like even before that, like me and Ryan was catching like crazy percentages a month where like price was pulling back nicely, creating all these structures. Like basically everything we're still waiting for now is catching crazy percentages. But over the last couple of months with Corona, it's like leveled out a little bit, and we're trying to just find this way to get into the market earlier.
Exactly. Because you see with times like this, uncertainty, normally when price has a destination, it just goes there. Because there's uncertainty, prices want to go there. You don't really skip these slowdowns anymore. It's just one-way trade. If you look at all the pairs today, big pairs took off. For example, NCD Chef. No pullbacks, it's a one straight trade. It's uncertainty. Everyone's fear. Everyone's just wanted to get out, just head one way. No one's ready for these little pullbacks anymore. Or not as much as they used to. They still appear, but now it's just time to level up, get at the top, and just fucking adapt.
Yeah. I was looking back on my like story highlights of before and afters and that. Like price used to pull back so nicely. But now it just doesn't. I think times are changing and you need to adapt.
Yeah.
And yeah, just like
you see
one day of back testing.
Yeah.
Right, so what trade is this? NZD CAD, September the 9th. Okay. Let me share my screen. NZD CAD. September the 9th. NZD CAD. Day back. September 9th.
I feel like I'm inside your head, Ant.
Why?
just bear repeating. September the 9th. Alright, sorry. Crack on.
Alright, so I was just looking back at something like this in the market. So where we kind of let's just ignore all that structure there. Just pay attention to what's going on now back here. So we was kind of impulsing to the downside. It was kind of impulsing to the downside, and then we kind of broke out here. And then what we done, if I just draw something across back here, for example, cool, we had this impulse above, boom, and then price is now pulling back, and you can see that price is sort of correcting now. You can see if I just draw maybe something like, I don't know, like that. You can see it's messy, like you don't want to be taking any sell positions within this. You want to be waiting for the continuation of buys. So normally, of course, what we'd kind of send in for this, or what we'd still look for, is something like a breakaway followed by a pullback. But when I was back testing, I noticed, okay, well, we've reached a strong level of support in the market through here. Boom. Like we've got a strong level of support across here. There's going to be a lot of orders. If there wasn't orders here, people are going to be like, oh, okay, we've reached a support level. Let's start taking buy positions and come back buy positions. So we're not entering the market here anyway. Like we're not entering this market at this moment in time. We're at this moment in time, we're thinking, okay, break and retest. But then let's see what happens. We get something like that, like a stop hunt. And what is that basically doing to me? It's coming to fill these orders at this level here. across here, where we've actually had this previous level of resistance now being used as support. So all these people getting in early here because of these wicks or whatever are thinking, oh, okay, yeah, it's going to start going up now. But no, that's just tricking people to get into the market early. And then if you see on the 1 hour, it might even be clear on the 15 of the actual liquidity grab, something like this, where you can see where we've had this doji, and then of course some people getting in and we've had this massive bearish engulfing candle here. So something like that is where you might enter your buy positions on. Price goes into a little bit of drawdown. You want to put your stop loss in a safe place somewhere down here, maybe not even that far, something like that. And then see what happens. Target the 90 ray. See, like even that is a 1 to 5, so you might like one. Do you know what I mean? It's a nice risk reward, not even to go that far into the market. You might even make the stop a bit bigger just to be generous with your risk reward or whatever. And let's see. Come down again. Boom. Okay, so for example, with this one, it took a long time to get there, but this is one of them examples. Okay, cool. We had that manipulation, the market stopping people out, but also we had the break above and then come down to pull back to continue. But even still, like even here where we've had the breakout continuation, you could have had something in the market like this, something like that, sort of corrective pattern where we broke above, now we're correcting, and then we broke out here. You could have even bought on that. Like it's not like that's just next confirmation. But like I said, it's probably not going to be the best risk to reward or whatever. Or you might wait for the pullback off that, or so on and so forth. But yeah, it's just two ways to get into the market basically. Is we're either waiting for that break and retest, or if you see this manipulation, it's just a nice way to get in early, and that acts as a kind of that acts as a confluence right there. That's a bomb. You know, that's a stop hunt, stopping all of these people out. But we're still buy bias because this is just coming back to retest this level. We're not now looking for sells. This isn't like a breakout of support. Now looking for sells. This is just an order grabbing orders from this level in the market to continue higher, as you can see. But yeah, that's just another example where you can see in the market. It's a little bit messy, but just from back testing where I saw it. Euro NZD. But back testing now. If times are changing, how far back in the market would you go to? What month? Start of the Corona times, just to adapt. Yeah, I'd look back. Yeah, start of Corona times. I mean, yeah, March. There's a lot of data to go off there. And if you have a lot of pairs, definitely. What was I looking at? So yeah, that was like 1.6. What's this one here? Yeah, AUD USD on maybe the 28th of September. I don't know, I haven't got a date in there. AUD USD on the 28th. Where did it happen?
I can see it right there. Move. Oh.
And that's
Was it not further back down there?
here.
You said 20th of September, was it not there now?
Wait. I didn't write in the date. Oh, it's 15-minute chart. I reckon. Oh, that's gonna be so annoying.
And it's right there.
Where?
There, look. 28th of September there. Drop it anywhere there.
Is it?
Yeah, do you not see it? Like there. Like there, isn't it? Is that it there? No, probably
No,
not.
I don't think it is. It's literally on the 28th, when the 28th starts. Maybe I should start putting the dates in. Let me try 28th 27th of August. 28th of August. No, it's not even going to be here. Oh, it's so annoying. Bear with. What was this one? It's not even good. This is 80 CAD, same kind of time, and 28th.
Oh, you don't know the month.
That's what I mean. It's too zoomed in because usually if you're in an hour, it will say the month at the bottom and that. 27th of September. No, it wouldn't be that. Is that it? This is buggy. That is so annoying. There's not a way I can. Price, that will do it. What's that? 95270. 952. So it's got to be here. It's got to be. Nope. 95. It's got to be here. Oh my god. I'm at the mayor, guys.
Yeah, don't worry
What's
about
this
it.
one here?
That's your NCD chef.
Alright, I'll just explain it because it worked. I'll just explain it from this picture. This is basically what happened. This is basically what happened. And just bearing in mind, okay, yeah, it did hit take profit. So this 50-minute chart, we had this kind of corrective structure in the market, and then we had this clear support level down here that was being respected. 1, 2, 3 people. So we know there's liquidity underneath. Can I zoom in on that? Yeah, boom. So we can see 1, 2, 3, and then we can see the liquidity grab down here, grabbing all these orders. So we entered off that. That's where we would have entered. And then that literally went straight up to hit TP. So all these people stopped out in the market, and then boom, went up to hit TP. So for this one, this is pretty much the exact same timing. So we had this correction, then we had the continuation where we looked at the pullback. And you can see it actually took out kind of 2 levels of liquidity in the market. So there was buying power down here, boom. You can see a lot of wicks. So there's buying pressure down here, and then you can see all these wicks down here, buying pressure. Then boom, massive candle, stopping all of these people out with this wick, and then it closed like that. So that would have been the entry, and that went off to hit like just up there. It's like a short trade in line with this level, and that's like a 1 to 3, 1 to 4 or something if I remember, 1 to 3. So just something like that. Just to get into the market. Yeah, that's so annoying. But yeah. Any questions? Yeah. I'll just see.
Ollie's done you.
See what Ollie put.
Ollie's done you in.
Oh.
Yeah, Ross. Just wait for that. Normally you see that close. Look on for 15 minutes as well, because 15 minutes you might see some sort of dojis and that. While still in like a 1 hour candle. So yeah.
I'm still looking for it. I'm not giving up.
Ollie, that's
any questions, guys?
Manipulation.
I found it. I just found it. It was July. Fuck me, I was doing some heavy back testing. But yeah, I've already kind of explained it, which is annoying. So
yeah, don't worry about it.
But yeah, like I'd just look back, see for yourself times that might happen. Like what I advise you to do is look back at all your analysis and see, or like trades that you might have missed or trades that you might have lost, just all of it really. That's what I do see when the manipulation, if there's manipulation, when it takes place. If you could have potentially got into a trade without waiting for the extra confirmation because of it.
Do you tend to do you tend to set alerts for like where prices kind of hitting that liquidity areas, or do you kind of just watch the market move?
I haven't done so far, but I probably could be a good idea.
Just because like if price is just wicking off and then you do get that stop on.
Yeah. Yeah, no, I know what you mean. It's kind of it's one of those ones that you could miss it definitely, but sometimes it's not always like a grab and then go. Like it could just sometimes you could be lucky where it hovers around the liquidity area for a bit before going up. Putting an alert is always good, to be fair, like definitely. But no, it's good. It's good idea. That's a good idea. Am I sharing my screen? Yeah, I am. Cool. So kind of see that liquidity grab right there. So with this one, if you remember this AU pair, where we had a nice break of resistance, impulse to the upside, then we corrected, and then that's when we was looking for our entries. So boom, broke out of the correction. We want to be getting in as close to the breakout of the correction as possible. So people, or even us maybe, are getting in buy positions here. Something like this. Probably would have got taken out at break even, but then what happened? Price came back down and actually formed a liquidity grab to grab all these orders. There wasn't enough. There wasn't in the market enough. So what they did, come down, form this massive bearish engulfing on 15, and then the rest is history really. No, it's not going to hit. Nah, I know it shoots at the sky. I watched it. Yeah. You see it everywhere. I was just backtesting. You see all these manipulation candles a lot. It's just something to look into. But yeah.
Yeah.
With backtesting.
Yeah.
Like, do you I've been doing a bit myself, but like, do you try and just pick like a random area? Because like I can imagine it's very easy to say, oh look, I see this trend line, I see this break and retest, and like that's like my backtesting done.
Yeah.
Does that make sense?
Yeah.
Yeah. But then again, sometimes technical analysis can be very obvious. So and you do slightly want to look out for those things, but just look at what happens at those moments in time.
Yeah.
Does that make sense?
Yeah.
Because I know it's easy to say, oh, pick a random spot, but if you see in previous history a downtrend, support and resistance, look what happens at those areas, and then trade it that, and you'll see the pattern come on time and time again. So I wouldn't say it's a bad thing, but I'll just recommend going all the way back and then just going across each way and just drawing out that way.
Yeah, I'm with you.
But yeah, it's no wrong in doing it because you will spot those eventually.
Yeah, because I think I know what you mean. Like sometimes when you're backtesting, you might like give yourself the benefit of the doubt. Sometimes when you're backtesting, like ignore the losing trades and then like just give yourself winning trades and stuff. So you've got to be as honest with yourself as possible. Like if you entered it, even if like you think you might not, just kind of maybe you want to give yourself like you want to put worst case scenario in your backtesting. You want to even if you think you might not have taken it, just put it in that you would have taken it, because worst case scenario backtesting is the best kind of backtesting you can do. And then if your worst case scenario in it and you're still coming out on top, though, then do you know what I mean? But yeah.
Yeah, I'm with you.
You get me?
Yeah, nice one.
What else can I advise for backtesting? Look back at your all your analysis. Like me and mine obviously sent loads of analysis in here. Like so when we were backtesting, we can like look back at that, see, so we can go back to that moment in time, see what we're looking for, and then so from that moment we can see, okay, well, what actually happened.
Yeah, I mean, I keep a record of mine on like Trello and that, just to, like, I've got them all on my laptop anyway, like all the analysis I've got. So yeah, it's probably worth just going back on them and just looking, seeing if there was anywhere else could have got them.
Yeah, 100%.
Definitely just going to back test this week now for sure. Yeah, I mean, to be fair, I don't know if there's like that many setups. I think AJ is all I'm pretty much looking at. I haven't really had a look. AJ could be a nice sell-off into 74.0. Other than that, I mean, you're like we're already up this week. Like NZD CHF 8, like we ate from that.
Sour.
Euro CAD is annoying.
Oh.
And then USD JPY is annoying, but it is what it is.
It is what it is.
Ollie, yeah, I was doing that the other day, making losers into winners without realising I need to stop being a tight ass and pay for trading view so I can do the replay. Yeah, I was about to say that. Do the free trial. If you don't pay for it, you can do the free trial and cancel it before the payment comes out.
I think if you don't want to pay for it, I think that's what you're saying.
Yeah. Ross is that kind of guy that makes 20 emails to get Netflix accounts every month. Already done them using 7.
Back in the day.
7, yeah, you know them ones.
7
like
kids.
20 charts on once.
Get back to me when you get 100.
Oh, 100 indicators. Nah, never, no way.
Nah, never, no way.
Yeah, no, I'm pretty sure TradingView do like Black Friday sale. Kogali, oh my god.
Do you remember that Donny? Where is he? He's long gone.
How do you remember him?
How do you remember him? Blast from the past. 1 million. Man did every single EMA possible.
Can't disrespect.
No, everyone's got their own unique way.
But yeah, yeah, what I was saying, TradingView do a Black Friday sale where I think like you get the Pro Plus for like really cheap. So get on that when that comes out. Because obviously you guys are gonna have TradingView for a while. So unless you're Ross and you're gonna keep getting free trials, then just pay for it. Oh, maybe turn my notifications off. I'm gonna lie.
Slated.
Deal with it.
Aye, man. The free trial, man.
Jokes.
And iron brew.
That is so jokes.
Right,
Oh wow.
Shall I tell you this joke? Alan Ryan's comedy sessions. What? Has anyone got any more questions, or do you want to keep on having banter? I reckon we're banter.
3 minutes left.
Oh. And guys, if you are doing this backtesting, just fire everything in the members chat, and then let us know what you're looking at, and we'll go from there. Innit? Keep you guys up to date on what we think. Well, I think it's bedtime. I think it's bedtime after this for me.
Oh.
Been up since what? At gym? 6 this morning.
Is that Kogali's review on our website?
I think it is.
No, it can't be.
It is. No, it is.
I'm pretty sure we said no.
I hope we did. Nah, it was very nice. He said he's now become a full-time trader since joining us. I remember that.
I was like, nah, bro. I was like, I can't put that on there.
Yeah.
Oh.
How much trading from the series now? I think Black Friday Pro Plus is like what, £200 then?
Nah, Pro Plus is 150 on Black Friday.
On Black Friday.
Don't let them. They're sneaky, yeah. Because what I did was I went to pay for the full one. Like I was on it. I was gonna pay for the full one. Then I was like, nah, cool. I'll do a free trial. And then when I done a free trial, they sent me an email saying, oh, we can give you 60% off for the Pro Plus. And that's what they do on Black Friday. They give Pro Plus away. So yeah, don't pay full price because do the free trial, and they're more than likely send you an offer to go like to pay the full amount. Yeah, I think it's like 150 for Pro Plus. Well, I've got premiums like cancel mine and I get ancient you Ross. Ross, mate, you're getting it right in.
Yeah, Ross. I'm looking off. Log off and do some back testing. Block out the haters with your charts.
I think this is the most the market's moved on like a Monday or Tuesday.
Yeah, no, it's been mad, isn't it?
Yeah.
Must have been some mad orders put in place.
Yeah.
You can, mad.
I mean, I hope today was helpful. I mean,
yeah,
like I'd say if my advice was smash out back testing, like, you'll see it everywhere. Yeah, that's what I do. That's what I've been doing.
That's what I would recommend as well. Not just me as well.
It's addicting, to be fair, back testing, yeah.
It's like a drug.
Do you just back test a load of pairs? Or would you just select a couple and then?
I'll just do like a pair a day.
Yeah.
I'm say be never end otherwise, wouldn't it?
Yeah, that's what I mean. You're literally like you can back test whatever. Like just do whatever. Like, obviously, the more you do, like the better. It's like the higher the sample size, the better the whatever it's called, isn't it?
Then you get to like 980 and then you can't backtest no more.
What?
You get to 982 or something, and then that's when the forex market, like when the charts started using data.
Before charts ever existed.
Yeah.
Wow. Imagine living in those times. That's when everything was run by fundamentals. Definitely.
Yeah. Technical analysis is like new to trading though. Like only in like I think the 2000s, traders start using technical analysis to start trading.
Imagine if trading view just went, no, we're gonna stop doing charts now.
You have to go somewhere else. Use MetTrade on the app. Fuck that. Horrible. Never trust anyone that trades, like analyzes their charts and posts it on Instagram or something using MetaTrader. It's like people, I don't know. Yeah, just don't do it.
Yeah, Brody, mate, don't worry, you were waffling on. I've still got. Oh no, I'm 2 minutes late. No, yeah, look it. Sweet, mate.
Yeah, no, we might as well call it a night then, innit? When one goes, we all go.
Mate. We'll go house now.
Yeah,
sweet. Yeah, we'll call it a night.
Yeah, sweet. See you guys on Thursday.